How's it going, everyone? It's Sam. Jerome Powell just freaked out the market. He just gave the federal FOMC statement. He answered questions on how the market's looking. He answered questions on when they're going to lower interest rates. And this affects crypto. This affects the stock market. I want to talk about it. If you don't mind, hit subscribe, turn on the bell notification underneath the video to see future videos just like this one. There's also a link down there to HGAaccess where you can get information from myself and about 9 other influencers. We're condensing the information to make it easier for you to understand and for you to see all the information. There's also a link down there to Margex where you can trade cryptocurrency on leverage. Super easy to set up. It's good to have something like this set up for the next bull run, for when the prices are going up, or even if you want to trade when we're just ranging, you can make some money from this. So definitely check out this link underneath the video. With my link, you get a deposit bonus that can be used towards some fees as well. Now, let me know what you think about this. I did change the camera around. I changed some of the settings on it. Let me know if it's a little bit less laggy and if it looks a little bit higher contrast, if it looks better. Now, Jerome Powell just went and spoke in front of the whole nation. And of course, we're all watching. And this is what happens. Over the last hour, boom, the S&P 500 fell. The NASDAQ fell. It's down about 1.8% right now. Crypto's down. I want to come back to these cryptos that are down specifically, but Bitcoin's right around 42,800. It was around 43,500 before the meeting. Let's go over some of the important things that he said. He said, we believe our policy is likely at its peak for the tightening cycle, indicating, obviously, that they're not looking to raise rates anymore. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation and ultimately require even tighter policy to get inflation back to 2%. So obviously he doesn't want to do that. He's talked about that in the past. But he also said reducing policy restraint too late or too little could unduly weaken economic activity and employment. You might be thinking, okay, why is he scaring the market? I'll get to that. There's something they didn't say that I think was really important. And then something they did say that was also really important. But so far, he sounds a little bit dovish. He also said, we want to see strong growth. We want to see a strong labor market. The strong growth obviously pertaining to GDP. Also saying that they want to see a strong labor market. We want inflation to come down like it has over the last 6 months. So he's saying we don't need to see GDP fall, or we don't need to see the labor market loosen. We really just need to see more inflation data. That is the key. He said, I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as a time to lower rates. This is one of the two things that scare the market. Basically saying, hey, I know that you're thinking we're going to cut in March, but I don't think we're going to get enough data by then. So, I mean, that is one of the things that the market's pricing in. It sounds like now they're saying maybe May. That's what's being priced into the market, is that we're going to have another 6 weeks with higher rates. There's a cost to that, right? So now instead of a 50-50 chance, now there's something more like a 20% chance that we see rates lower at that March meeting. Of course, they could always change their mind. He also said they're planning to start in-depth balance sheet talks in March. So maybe they don't reduce rates in March, but maybe they start quantitative easing a little bit more, or at least stop quantitative tightening. Now, maybe they're just talking about that in March too. That's the other side, is yes, it could happen in March, but it could also happen in May, and they're just talking about it in March. There were some discussions of that here today. So that's what he said that freaked out the market. Here's what he said what he didn't say that freaked out the market. He says, the committee seeks to achieve maximum employment and inflation rate at the rate of 2% over the long-term goal. He took out the U.S. banking system is sound and resilient. Okay, so they took out that the banking system is sound and resilient. I guess there are two different reasons for that. One could be that that's not even something that they're considering anymore. They don't care because it's been a while since March when banks were collapsing. On the other hand, it could be that they don't think that the banking system is sound and resilient. There's a bank today in the U.S. that has fallen 37% after earnings, New York Committee Bancorp, NYCB. And they fell a significant amount because they missed earnings. They also had a 71% dividend cut. They took over Signature Bank's non-crypto related deposits and they fell. The company in the statement said that the fourth quarter net income and diluted EPS were hit by merger related items and a FDIC special assessment. So a lot of people are wondering, okay, is the banking system actually resilient? If they're going to push back the time that they're going to lower rates, that's going to be harder for banks to continue to deal with this higher rate environment, and they're going to have to go another 6 weeks. We may see more collapses in this time, and it could get worse for companies like this as well. Keep in mind, this is a pretty volatile stock. I mean, maybe it's just all banking stocks, but you can see like, okay, over the last 5 years, it went from $14 down in COVID to $7, $8, then back up, then back down, then back up. But now it's down at the lowest point that's been in over 5 years. So I'd be paying attention to this. This is something that is concerning. So we're going to have to be paying attention to this, seeing, okay, well, we were expecting a pretty good chance, about 60% chance of the Fed cutting in March. Probably going to fall down, probably what's causing the market to fall right now, and we have to continue to watch the banks as well. Now, I want to cover some crypto-related stuff as well. Tether reported a $2.85 billion profit in Q4. They're okay with this higher rate environment. They're making a lot of money from it. On the other side, there would probably be more people putting money into Tether if we had lower rates because more people would come into crypto. So either way, I guess they win. But they had a record-breaking profit this quarter, $2.85 billion for the quarter. Keep that in mind. $2.5 billion for the quarter, about $1 billion in net operating profits from interest on U.S. Treasuries, and then the rest coming from gold and Bitcoin reserves, the appreciation of them. So they had a significant profit, and they put a portion of this profit into Bitcoin. I saw a really good analyst, Will Clemente, talk about how, well, there goes $430 million into Bitcoin, but that's not how it works out, I don't think, because they made about $1 billion in actual operating profit. I think that's what they use. They've said in the past they're going to put about 15% of their profit into Bitcoin. But obviously, if Bitcoin appreciates, they're not taking profits on that and putting it into Bitcoin. So it should just be part of this $1 billion that they're going to go buy Bitcoin with, or they already have. I'm not sure exactly the system they have, but this is good. This continues to buy them more and more Bitcoin. And as you can see here, now they have $2.82 billion worth of Bitcoin. Kind of interesting. There's a lot of $2.8 billion here because they had a record $2.85 billion in profit. They had $2.82 billion Bitcoin just in general, and IBIT also holds now $2.8 billion as well. It's something about $2.8 billion today, but they are up to $2.8 billion or $2.76 billion in market value over there. Now, another piece of news that's causing, or another thing that's causing the Bitcoin market to fall off a little bit, maybe it's because today GBTC has actually got a significantly higher volume than IBIT and FBTC. 381.9 million in volume. Now keep in mind, if everything in IBIT and FBTC and ARKB is just inflows, we still have a very big net day going into Bitcoin. I mean, like 382 million versus something like 500 million. So there's still about 120 million, maybe 150 million, something like that, maybe net going into Bitcoin, even if you see a large number coming out of Grayscale. We also have had a couple big cryptos pump up out of nowhere today. I mean, Jupiter had their airdrop, and it shows here as negative 60% or something on the 24 hours, but it's held up pretty well. I mean, after the initial claims, there are people selling it for like $2, a dollar, all the way down, but it's pretty much stayed at 60 to 65 cents all day, and this has gone quite well. I mean, they have a $856 million market cap, fully diluted, over $6 billion, and this just started today. That's nuts. There have been actually a couple big cryptos that have launched this year. If you look at the worst performing cryptos, actually, today, Jupiter down 60%, but obviously that's jaded because they didn't actually fall 60%. FTX down 16%, but Manta and Celestia both down double digits today. And both of these are brand new too. I mean, this is crazy. 3 of the top 82 cryptos, or 3 of the top 100 cryptos, if you want to look at it that way, all came in the last couple months, last like 3 months. So there's more money flowing back into crypto, and it makes sense when, you know, with their big token airdrops, when the Fed's looking at cutting rates, there's more money flowing into crypto. Also, I have nothing to do with this. I have no position in it. I've never even looked at it today, or I've never even looked at it. Just today I saw this though. Pork, some cryptocurrency, went up to $170 million market cap. It was launched today, apparently. Like, the crypto's nuts right now. Even with the Fed scaring the market, even with Bitcoin falling down, I mean, like, there's still multi-$100 million, multi-billion dollar cryptocurrencies launching. So there's still money to be made, right? Even if the market has to reprice what happened here today with the Fed, it's okay. Long term, we're still going to make it. We're still going to be fine. Let me know your thoughts on all this underneath the video. You can check out the link to Margex underneath the video and the link to HGAccess. Hit subscribe, and I'll see you in the next video. Bye.